All right. Well, welcome, Sri, to our Chicago office. Thanks for flying in from Toronto.
Thank you very much for this opportunity.
Yeah. Well, I'm really excited to have you. I know we spent some time about 2 months ago at an event, and I was very impressed by your background and some of the things that you discussed in the AI space. So for our audience, would you mind just bringing us up to speed on your background and what you're doing today at Guardian?
Sure. My background is I did a undergraduate in accounting, which I was in numbers all my life, and then I went on to do my master's in applied statistics and finance. And so at that intercept of statistics and finance, when I got out of Rutgers, I decided to stay in school a little bit longer, and I got my master's MBA in applied finance. And from there on, I also had a professional chartered accountant degree. It's called cost accounting.
Yeah.
And from there, I just got into my first job in Princeton, New Jersey, in a tactical asset allocation hedge fund type business. And I was there about 8-9 years. Met my wife when I was in Princeton as a analyst and a hedge fund analyst, and then moved down to Canada in 2001.
Wow.
And been there for 24 years, joined Guardian Capital, been at Guardian for 24 years,
Yeah.
started with zero assets, and proud to say we're about $5.5 billion right now with a team of data science engineers.
Wow. So tell me about your typical day, right? You mentioned that you have a very strong team, bunch of engineers, some data scientists. What is that, and what does your day consist of?
See, my role, if you say my title is Managing Director, Head of iCubed Investments. So it's a practical title in the sense I manage and I direct. I manage money and I direct research. So I have multiple roles that I have to play, but this is a once in a lifetime opportunity where you have an inflection point where data is starting to make sense in so many ways that it was never possible before. So my job is to bring my domain expertise as a statistician, as a person who has lived with numbers all my life in the world of finance, and bring that domain expertise and work with data scientists who are experts in their field and motivate them and come up with idea generation as well as feature engineering and building models, monitoring models. So that whole workflow of artificial intelligence, I supervise and I give them feedback and I mentor them. On the other side, we also manage $5.5 billion. Because we use artificial intelligence and the information from AI to manage money, I use AI outputs to infer from that information and then build portfolios and construct portfolios. So my day starts at around 8 a.m. in the morning. We have our usual meetings. I have two types of meetings. I have meetings with my portfolio management team, which is more investment related and portfolio related. And then I also have a project team meetings with my data scientist regarding what models are being built and what kind of information is available in the market. So it's a pretty busy schedule. Between that, I do meet clients. We know it's a client-friendly business. You always have to relate to your clients. So I do go out when asked to meet clients. I love meeting clients. I love engaging them with the mindset of what is AI and how money is being managed today. So it's a pretty exciting career. I think I've got a take two on my career. I love coming into work.
I'm sure you're super energized. So you just kind of hit on my next question. Like, what is AI, right? We hear artificial intelligence, machine learning. It's a buzzword right now, but how would you describe that for someone that's heard what AI is, but they're not sure what it is or how to use it?
Well, if you really put AI into a very simplistic format, AI is statistics on steroids. The intersection of computer science and statistics is called artificial intelligence. With the emergence of alternative data sets, as I said, like 90% of all the data is being created in the last 2 years. The evolution of mathematical techniques and statistical techniques and computer science with parallel computing has allowed machines to do iterative approaches to data much faster and much more accurate than it had ever before. So artificial intelligence is nothing but training a machine to do tasks that normally humans would do, but in a more efficient and in a more productive way. Artificial intelligence is beyond that in the construct of now making computers think like human beings And so it's a very broad spectrum when you
Yep.
say artificial intelligence. When you combine the word artificial and intelligence, you're basically representing the ability of a machine to do what humans can do.
Impressive. So you technically have to teach the machine. So talk about that. If you're looking at building a model or maybe leveraging AI in some other space, how do you teach the machine? How do you know what to teach the machines?
So teaching a machine is like raising a kid.
Yeah.
It depends on the parents of how they imbibe their virtues and values into the kid. If I hire a data science engineer and tell him to say, build something to predict something in the stock market, he will not be able to do it because he has no experience or spatial sense of what the stock market was.
Yeah.
So experience matters in artificial intelligence. So when we talk about training an artificial intelligence system, there are multiple, I'll keep it simple, there are multiple architectures when it comes to training. When you talk about machine learning, which is part of artificial intelligence, there are techniques called supervised learning and unsupervised learning. Supervised learning is you train a machine with an existing set of panel data in the past, historical data,
Yeah.
and you give it a concurrent result that you want to achieve in that part of the market cycle. And what the computer does is, in a supervised framework, it learns from the data and tries to iteratively understand what parts of this data are needed to predict this. So let's take example dividend growth of a company. What is needed to predict the dividend growth into the next year?
Yeah.
Profit and loss data, balance sheet data, cash flow data, new sentiment data, macroeconomic data,
Yeah.
market take data. All of these data sets have to be created, built into vectors, and then you give it to a machine and say, hey, this is what I'm giving you to learn from, but this is what I want from you, which is a dividend growth prediction for a stock.
Yeah.
Machines run millions, sometimes billions of combinations and iterations of these data sets to come up with a high probability estimate of what could happen in the future. That's called supervised learning. Unsupervised learning is you do not give it an outcome. You just give it the information and tell it, give me an outcome.
Oh.
That's machine learning. Deep learning is basically what we call a neural network, which is basically understanding that machines can understand abstract outputs.
Yeah.
And they use multiple layers like the human brains and come up with multiple relationships between layers of abstract data sets and comes up with a probability distribution or an estimate. And finally today, which everybody knows about, which is ChatGPT and large language models, is another part of artificial intelligence architecture where you are training that on billions and trillions of data sets, where machines are now able to learn through attention learning and vectorization, and they're able to encode or decode language and interpretation.
That's impressive.
That's how much the journey of AI has come, and it's gone even further now.
Yeah, and I'm starting to see it a lot in sports. I'm a big sports fanatic, and you'll see 4th and 3, analytics say go for it, or kick the field goal. But how do you measure the environment? How do you measure nerves? How do you measure my kicker's not feeling good today? It takes some, I assume, some other inputs or some other suggestions to know when to use the data and when not to use the data.
So you brought an important question here in the sense that AI is not a magic wand. AI does the mundane. It takes you to the red zone.
Yeah.
So if you're comparing two money managers, if I'll give you an example of your aspect you mentioned, if you have two money managers you're talking to, or let's call it two quarterbacks, one quarterback is starting on his own 20-yard line, and the other quarterback is starting in the red zone every time.
Yeah.
Which quarterback has a higher chance of scoring a touchdown?
Red zone.
The red zone, because he's already 60 yards, he's already passed. But at the red zone, the quarterback still has to pass it to a tight end, or a receiver, or a running back, or take it by himself, or get his teeth broken by a linebacker.
Yeah.
That human element and judgment is still very much relevant
Yep.
in the world of artificial intelligence, where inferencing or what we call fiduciary responsibility,
Yep.
or memory, or ethics. All of these components are like adaptive decision making are all still very relevant in the human realm today. So the ability to address circumstances like, say, a tech bubble or COVID or anything like that in the market comes out of nowhere.
Right.
We still have human portfolio managers that are using the artificial intelligence data, inferring that data, adapting to it, and then implementing the model. So I always feel in the philosophy of collaborative response to AI.
Yeah.
That is, humans and machines have to work together.
Yeah.
One doesn't replace the other. One makes the other better.
Yeah.
I train AI to make it better. I expect AI to make me better.
Yeah.
That's the way I look at it.
And
And that's how my data science
And you mentioned
engineers look at
earlier
it.
where AI can enable the user to do less doing and more thinking.
You got it.
Can you elaborate on that a little bit?
Well, that came out because a lot of people ask me the questions, Sri, if AI does everything, what are you going to do?
Yeah.
And that's a very logical question. It comes from an innate sense of insecurity by humans because we don't trust machines.
Right.
And all the way from Terminator 2 to now whatever
Yeah.
movies you watch, Ex Machina, you don't have a tendency to trust machines. So how does a money manager trust a machine to give him ideas that are disruptive to the market and who's able to beat the market consistently?
Yeah.
The mindset here is in a PM's life or an analyst's life, or even in our lives, if you really introspect, you'll realize that we do so much,
Yep.
the mundane, that we never have time to think for ourselves.
Yeah.
So my job today is not a doer anymore. I'm a seeker, I'm a thinker in my business. Because if I only do, my brain is so narrow
Yep.
that I'm not able to have the spatial sense to make decisions globally, whether it's geopolitical risk or markets risks or stock picking risk. So what I realized is artificial intelligence has liberated myself and my portfolio management team
Yeah.
from the mundane, and it allows us to actually build a portfolio without being distracted by market noise or misinformation or overinformation in the stock market. So the sabermetrics of just focusing on dividend growth and a probability of dividend cut, which are the only two things matter if you're running a dividend strategy,
Yeah.
or earnings growth, or earnings volatility, or earnings disappointment, which are the only thing that should matter when you're running a growth strategy, allows you to start to narrow yourself down into the productivity realm so that your brain gets separated from doing
Yep.
and you start thinking. So that's where I'm going with my philosophy with artificial intelligence as a money manager.
Yeah, I like that. So you hear growth versus dividend. Do you have any thought? I know you have a big focus on growing dividends, but if you've got growing dividends and growth, kind of what's your thought for someone with the long-term horizon?
So you're asking a very important question. We call these labels in our industry, right?
Yeah.
Growth, value, large cap, small cap, dividends. It all boils down to two principal concepts in finance: duration and credit. When you are buying a growth strategy or you're looking for a stock that gives you growth, you're basically buying a stock for the longer duration. When you're buying a stock for dividends or income, you're generally representing a shorter duration. So when you're going for growth, the core responsibility is to make sure that you're buying companies that have the ability to grow their earnings and indirectly their cash flow.
Yeah.
That's the biggest reason you should own a growth stocks. You can buy space rock mining or some kind of speculative nihilistic responses to the market, but they do not really address the question of what true growth is. On the other side, if you look at dividends, you should not be chasing dividends, because if you chase dividends, you're exposed to credit risk, interest rate risk, dividend cuts, value bias. These are subconscious implied risks you're taking that are not visible to you but invariably bite you. So when it comes to dividends, the trade-off is whether you want a company that will grow its dividends, or do you want a company that's going to pay all its cash flow up front so you're not going to expect any growth in the future. So these trade-offs between growth and dividends has to be explained in the context of accumulation of wealth, protection of wealth, and then deaccumulation of wealth. So these are constructs that we have to use when we manage money and build portfolios, so that each financial advisor, by the way, in our industry, I'm a surgeon, I'm not a doctor.
Yep.
The financial advisor is the doctor. He knows the patient. So what kind of products have to be put together to give that liability distribution and matching for the client is a very, very critical response. And that's where AI comes into play. AI is a probabilistic output. It gives you a smoother ride from point A to point B because it takes away human judgment and human speculative elements.
Impressive. So Sri, obviously you're a big proponent of AI. Where do you see AI in 15 to 20 years?
So my honest answer is I don't know where AI is going to go next year, let alone 15 to 20 years. The AI is a revolution, not an evolution right now. The abilities for artificial intelligence to change the way we do things and the way we live is omnipotent. It's everywhere around us. I would say specific to our investment industry, because that's my domain.
Right.
I cannot speak to other industries. Of course, it's used in medical science industry, in every aspect, in healthcare, in defense, in industrials, in every aspect of life, you're seeing artificial intelligence being used, education technology. But if you look at fintech or financial technology right now, I would say the future of AI is extremely bright and revolutionary. And the three areas that I see further growth coming from AI, especially in money managers like myself who are using AI to build a dividend strategy or a growth strategy, is number one is generative AI and large language models, where machines having the ability to interpret portfolio positions from day 1 to day 30 or day 60 and understand the nuanced changes in performance of each stock in the portfolio and narratively come up with a description in English or any other language so that it could describe what has actually happened in the portfolio and what is being contributed by selection effect, allocation effect, or risk, or single stock, is very much going to be pervasive in our industry. The second component I would say is knowledge graphs. Knowledge graphs is an artificial intelligence technique which allows big data and AI systems to connect nuanced relationship between companies and businesses around the world. So if you're buying NVIDIA, because everybody else is, what is NVIDIA enabling? And what are the companies that will benefit from NVIDIA? And what are the upstream and downstream companies that are benefiting from NVIDIA? So knowledge graphs are going to be used aggressively in our industry to redefine asset classes and clusters. It won't be just traditional GICs. It could be knowledge graph-based clusters. And the third one I would say, which is the biggest thing, is it's not in our domain right now, but when it comes to multi-asset and asset allocation, I think the evolution of quantum computing and the impact of quantum computing in coming up with prescriptive asset allocation mixes, which gives you a higher probability of achieving your end goal, is around the corner. Now, quantum computing is extremely expensive and extremely ineffective right now in many parts of industries like material sciences or healthcare, because you need what they call qubits, the number of qubits that are needed. Just like you have GPUs and TPUs and AI, in quantum computing they call qubits. And but simple closed form mathematical solutions like optimization could be solved with 1 qubit. So the ability for large corporations to start using qubits and build quantum computing asset allocation models is realistic and could happen sometime in the future. So I don't know what's going to happen 15 years from now, but at least in the context of asset management and implementation, you could see AI being used in multiple ways, but some of the things I humbly said here might come true or not, but that's the area where I see it go.
Sounds quite exciting on my for me. So my last question again, just thinking about our listeners here. Some of the listeners are new or starting their businesses, whether that's an advisory practice or their own business, and some have been in business for 30 plus years. What advice around AI would you share with that group, or both groups?
So one thing I would say is, if I can use an example,
Sure.
My son's 21 years old, and he's a computer scientist, started his own AI company, and I asked my son, I said, hey, Hey, Nick, will AI replace humans? Because that's the quintessential question that both the young and the old are asking in any business, let alone our business.
Yeah.
And his answer to me was, he said, Dad, AI will not replace humans, but humans that use AI will replace humans that don't. So whether you are a financial advisor just coming into the business right now, or you're a financial advisor who has built a big book of business and who's trying to manage that, the use case of artificial intelligence would be slightly different. The established book whose experience should not see an adversarial response to artificial intelligence, but have the ability to employ younger people in the team who are embracing artificial intelligence and improve the productivity of the larger business. Because in the end, advisory business is a people business.
Yeah.
It is a thinking business, if you really think about it. So the ability for a financial advisor to not be worried about the mundane, even if it's compliance, what is the probability of some compliance dislocation, could be used and be done by artificial intelligence. So I think mature books could employ younger people in their team and use them for productivity gains so that they could focus on client servicing and doing the right thing.
Wow.
Younger advisors should embrace, in my opinion, artificial intelligence aggressively, because as they start to build their careers, the clientele and the people they're going to speak to in their age bracket are going to be well versed with artificial intelligence and much more respective and responsive to artificial intelligence. So if you come across as being naive and not understanding that space, you might find yourself harder to build a book of business.
Wow.
So it's a very, I hope I'm right, but I think these are very different ways of looking at AI.
Yeah.
I don't want to complicate it more than that.
That's just great advice. Well, listen, I want to thank you again for flying in from Toronto. I think probably the coldest week of the year.
Sure was.
Across the nation. And really want to wish you great safe travels back. But thanks so much. So Sri Iyer, Guardian Capital.
Thank you very much.
Awesome.
It's a pleasure.
Yeah.